Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5, one line of logic at a time. I'm your host at AlgoBot, and today we're studying an expert advisor called band walk continuation. This one takes a familiar tool, the Bollinger Bands, and flips the usual playbook on its head. Instead of fading extremes, it looks to join strong, one-directional moves after a healthy pause. By the end of this video, you'll understand how it defines a trend, waits for a shallow pullback, and steps back in with the move. Let's dig in. Remember, this is educational information only. So what exactly does band walk continuation do? At its heart, this is a trend continuation strategy built around three classic indicators working together. The first is the Bollinger Bands, calculated here with a 20-period average and rails set 2 standard deviations above and below that mean. The second is an exponential moving average, using a 50-period baseline, which keeps the strategy aligned with the broader direction. The third is the average true range, or ATR, over 14 bars, which measures how much the market is currently moving so the protective stop can adapt to volatility. The core idea is what traders call walking the bands. When price posts several consecutive closes beyond the upper or lower rail, that is not treated as an exhausted extreme ready to snap back. Instead, it is read as the signature of a strong, one-directional regime. Rather than betting against that strength, this approach respects it, waits for a shallow pullback toward the middle band, and then looks to rejoin the move as it resumes. Because everything is derived from a single selected time frame, the strategy can be applied to whatever chart period you attach it to, from intraday to higher time frames. It uses distinct rules for long and short setups, so it can study both rising and falling conditions. Who is this style of approach designed for, in an educational sense? It tends to suit traders who prefer following momentum rather than picking tops and bottoms, and who are comfortable letting a defined set of rules manage each position from entry to exit. As with any strategy, it will produce losing trades as well as winning ones, and no configuration removes the risk that comes with trading. Everything we cover here is for learning purposes and is not financial advice. Let's walk through the exact logic the expert advisor follows, step by step. Everything happens on the close of each bar, so the strategy waits for a candle to finish before making any decision. The engine runs a small state machine for each side, long and short, that moves through 3 stages: idle, walking, and pulled back. Consider the long side. First, the strategy counts consecutive closes above the upper Bollinger Band. Once that count reaches the WalkBars setting, which defaults to 2, it marks the setup as walking. This confirms price is genuinely riding the band rather than poking above it once by chance. Next, the strategy waits for a pullback. When price closes back below the middle band while the walk is still valid, the state advances to pulled back. This is the shallow, healthy dip toward the mean that the concept is built around. Crucially, the setup is time-boxed. The max setup age parameter, which defaults to 8 bars, gives each setup a limited lifespan. If the pullback takes too long, or price breaks the opposite rail, the setup cancels itself and returns to idle, so stale ideas never trade. The entry itself needs 3 conditions to align on the same closed bar. Price must close back above the middle band. The bar must be bullish, meaning it closes above its open, and price must sit above the 50-period EMA baseline. When all 3 agree, the EA signals a buy. The short side is a mirror image, a confirmed walk below the lower band, a pullback above the middle band, then a bearish close back below the middle while price sits under the EMA signals a sell. Now for risk management. The stop loss is placed using the ATR. The distance is the ATR multiplied by the AtrStopMult setting, which defaults to 1.5, so the stop automatically widens in fast markets and tightens in calm ones. The take profit is a fixed multiple of that same risk distance, set by the RewardRatio parameter, which defaults to 1.8. In other words, the target is roughly 1.8 times the amount being risked. The EA also allows only 1 open position at a time per magic number, keeping each trade clean and isolated. Trading always carries risk, and this structure is designed to define that risk, not to remove it. Let's look at the actual MetaTrader 5 code driving this, as you'd see it in MetaEditor. At the top are the input parameters, and these mirror the strategy's settings exactly. Band period and band deviations define the Bollinger Bands, 20 and 2 by default. WalkBars sets how many closes beyond a rail confirm a walk. Max setup age caps how long a setup can live, and trend period is the 50-period EMA baseline. ATR period and ATR stop multiple size the stop from volatility, while reward ratio fixes the target as a multiple of that risk. Lots is the fixed trade volume. Below the inputs is the heart of the logic. We first compute risk as ATR stop multiple times the current ATR. Then look at the long block. The condition checks that the long state equals pulled back, that the close is above the middle band, that the close is above the open, so the bar is bullish, and that the close is above the EMA. When every part is true, the code reads the ask price as the entry, sets the stop 1 risk distance below it, sets the take profit at the reward ratio times risk above it, and calls trade.buy. The short block directly underneath is the mirror. It checks that the short state is pulled back, the close is below the middle band, the close is below the open, so the bar is bearish, and the close is below the EMA. It then reads the bid as the entry, places the stop 1 risk distance above, sets the take profit the reward ratio times risk below, and calls trade.sell. Notice how both sides use the same volatility-based stop and the same reward multiple, just flipped in direction. Clean, symmetrical, and objective. Now let's bring the logic to life on a chart. On screen you can see our candles with 3 Bollinger Band lines drawn over them, the upper rail, the middle band, and the lower rail, plus the slower EMA baseline weaving through the middle. Watch how the strategy reads this picture from left to right. We begin in a quiet stretch, with price hugging the middle band. Then momentum builds. 2 candles in a row push up and close above the upper band. This is the walk the strategy is waiting for. Because WalkBars is set to 2, those 2 consecutive closes beyond the upper rail are enough to confirm a genuine band walk. The internal state flips from idle to walking. Price is clearly riding the upper band, the hallmark of a strong, one-directional move rather than a random spike. But the strategy does not chase that strength at its most stretched point. Instead, it waits. Over the next couple of candles, price cools off and drifts back down, and 1 candle closes back below the middle band. That is the shallow, healthy pullback the concept is built around, and the state advances from walking to pulled back. Notice price has not broken the lower rail, and the pullback has not gone stale, so the setup is still alive and still counting down against its maximum age. Then comes the moment the strategy has been building toward. A fresh candle pushes back up and closes above the middle band. It closes above its own open, so it is a bullish bar, and price is sitting above the EMA baseline. All 3 conditions align, and you see the buy entry marker appear. This is a continuation entry. We waited for strength, waited for a dip, and stepped in as the trend resumed. From there, the stop loss sits a volatility-based distance below the entry, measured from the ATR, while the take profit sits farther above at 1.8 times that risk distance. Price follows through, pushing higher over the next candles until it reaches the take profit target, and the long trade is complete. Notice we never tried to catch the exact bottom. We joined an established move after it proved itself, and then paused. Now watch the picture flip. After topping out, price rolls over and starts sliding. 2 candles close below the lower band, the mirror image of what we saw earlier, and the short side confirms its own band walk. The state moves to walking on the short side, and the earlier long setup is cleared away automatically. Just as before, the strategy waits for a pullback rather than selling into the low. Price bounces, and 1 candle closes back above the middle band, advancing the short setup to pulled back. Again, the setup is time boxed, so if that bounce dragged on too long or price reclaimed the upper rail, it would simply reset. Then the short entry aligns. A candle closes back below the middle band. It is a bearish bar closing below its open, and price sits below the EMA baseline. The sell entry marker appears. Here the stop loss sits a volatility-based distance above the entry, and the take profit sits farther below at that same 1.8 reward multiple. Price continues lower, working its way down to the take profit target, and the short trade completes. Step back, and you can see the rhythm. In both directions, the strategy did the same 4 things in order. It confirmed a band walk. It waited for a pullback to the mean. It required a bar closing back through the mean in the trend's direction, while price agreed with the EMA, and it defined its risk and reward before entering. That disciplined sequence is the whole idea. Of course, not every setup follows through this cleanly, and losing trades are a normal part of any approach like this. And that brings us to the end of our breakdown of band walk continuation. We covered the core concept of walking the bands as a sign of trend strength, the three-stage state machine that moves from idle to walking to pulled back, the exact conditions that signal a long or a short, and the ATR-based stop paired with a fixed reward multiple. Remember, everything in this video is educational information only and is not financial advice, a recommendation, or a solicitation to trade. Trading involves real risk, and losses are a normal part of it. If you found this analysis helpful, please like the video, leave a comment with any strategy you'd like us to examine next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.